Do you think now is the best time to load up Tesla stock? Others believe that Tesla's current valuation, although may be considered low, is actually the best time to buy stocks. In fact, most believe that investors should take advantage of Tesla's stock's current low price tag before it goes up again. You definitely would not want to miss this one. Experts believe that the longer the outlook, the more beneficial it is to go against conventional wisdom. That said, although it appears to be the worst possible time to buy Tesla stock, with the stock having just hit its lowest point in 2 years and seemingly in free fall, it still makes sense to invest in the leading EV company. Today, Tesla is still trading below $200. Because of this, investors are hesitant to buy Tesla shares. With Tesla stock 52% from its highs, investors may be contemplating adding Tesla shares to their portfolio. Get an extra $10 cash. Open an account and deposit any amount on Moomoo. It's a limited bonus for celebrating Moomoo's 10th anniversary. Check the link below. Moomoo is a great platform to trade stocks with many unique, easy-to-use tools. I think a lot of you will find it really helpful, especially if you want to be more hands-on with your investments. For example, find out the right time to buy and sell stocks. Link in the description below. Over the last 3 months, Tesla shares have lost about a third of their value. Year to date, they are down more than 40%. The pullback in the stock price likely has a lot of investors wondering if now is a good time to buy the electric car maker's stock. After all, even though shares are down, the underlying business is growing rapidly. Today, the entire globe is undeniably facing intense macroeconomic certainty. However, it is not reflected in Tesla's recent business results. Third quarter revenue soared 56% year-over-year, and free cash flow for the period increased 148% to about $3.3 billion. Further, the company's cash position grew to $21.1 billion. The strong quarter was fueled by Tesla's surging vehicle deliveries. In fact, total third-quarter deliveries increased 42% year-over-year to 343,830. Tesla reported its Q3 earnings last month and beat EPS expectations by 10% at $1.05 per share. The stock dropped despite the beat on the company's bottom line. Top-line growth was underwhelming, with sales missing expectations by 4% on revenue of $21.45 billion. Despite a record 343,830 deliveries during the quarter, this slightly missed expectations as well. Tesla stock is down around 46% year-to-date to underperform the S&P 500's negative 22%. Tesla shares are still up 721% over the last 3 years to crush the benchmark and its peer group's plus 7%. Tesla expects full-year production to grow 50% versus 2021. Growth in deliveries is expected to be just under 50%, said Tesla Chief Financial Officer Zachary Kirkhorn in the company's third-quarter earnings call. Tesla CEO Elon Musk insinuated during the call that vehicle order levels remain strong for the fourth quarter. "I can't emphasize enough, we have excellent demand for Q4, and we expect to sell every car that we make for as far in the future as we can see," Musk explained. Still, Tesla's outlook is becoming more important, with investors coming away less impressed with Tesla's growth following its Q3 release. The EV company shares are still roughly down 14% since the report. Year-over-year, Tesla earnings are now expected to rise 79% to $4.05. The fiscal year 2023 earnings are expected to rise another 30% at $5.29 per share. Top-line growth is expected as well, with sales set to climb 54% this year and another 39% in fiscal year 2023 at $115.38 billion. This is more than quadruple pre-pandemic sales of $24.57 billion in 2019. Currently trading at around $180 per share, Tesla stock has a PE of 43.8x, which is well above the industry average of 12.2x. However, Tesla remains the industry leader in the EV market and trades much lower than its decade high of 45,336x and the median of 236.9x. Moreover, competition from established automakers like General Motors and Ford are at far different stages of corporate life and aren't experiencing growth like Tesla. Although Tesla is known to be extremely volatile, so are other stocks. Even in 2021, when Tesla stock was following a downward trend, an investor said, "Anytime you get the chance to buy it, as Tesla stock dipped at the time. In June 2021, the managing director of Vios Advisors at Rockefeller Capital Management, Michael Bappas, told CNBC that Tesla's roughly 24% market share at the time and ambitions in the electric vehicle, space, and clean energy markets make it a name worth watching. Tesla is going to continue to be the leader in the industry, especially for the foreseeable future. Bappas said on Trading Nation, "When you think Tesla, you think innovation." Today, Tesla stock is once again experiencing a dip after the company recently released production and delivery numbers that fell below Wall Street's expectations. However, some experts claim that now, while the stock price is cheaper, is the best time to buy Tesla stock. In fact, star investor and known Tesla bull Cathie Wood and her firm ARK Invest bought Tesla shares twice in October, once after the EV company released delivery and production numbers in early October, and another after the company's Q3 earnings call. Moreover, Wood's ARK Invest bought Tesla shares in several funds several days ago. For most, Tesla might even seem like a pricey stock in terms of valuation, but the company has delivered huge earnings and revenue growth for several quarters in a row. Also, annual earnings estimates show the company's growth trajectory is still very much intact. Experts believe that the future looks bright for Tesla. For investors looking years or decades down the road, buying Tesla right now could make good sense. After all, most analysts believe that Tesla stock is more suited for long-term investors rather than short-term investors. That said, looking over the long term, bullish investors place their hopes on fully autonomous vehicles. While dozens of companies are working toward that end, in one way or another, Tesla's lead is difficult to surmount. Tesla's use of cameras, radar, and GPS has been advancing for years to the point that Tesla vehicles are practically self-driving. Furthermore, Tesla has notably spent billions to build its two new manufacturing facilities in Texas and Germany, as well as upgrading its Shanghai plant. This move is meant to boost the company's overall production. The China plant can now produce 1.1 million vehicles annually at full capacity. It closed in on that run rate with a monthly record of 83,135 units in September. The company has also said its energy division, which includes battery storage and solar rooftops, has more demand than it can supply. Sales from that division represented 5% of total revenue in the third quarter. Tesla is undeniably performing well, although it faces supply chain and logistics headwinds. The company produced 22,000 more vehicles in the third quarter than it was able to deliver due to shipping bottlenecks. Customers will take ownership of those vehicles in the fourth quarter. That issue could cause 2022 deliveries to miss the company's 50% annual growth target, but it does expect production to still hit that level of growth. Experts believe that investors shouldn't count on any stock to guarantee a certain return over just 1 or 2 years. There are numerous factors like the current supply chain risks. Elon Musk, although most known for being a controversial leader, has also been aggressive with his predictions. The Tesla semi-truck was first announced nearly 5 years ago and is now set to begin deliveries next month. At this point, it appears that things are going well for Tesla, especially relative to the rest of the auto industry. According to a report by Cox Automotive, an auto dealer marketing and operations software company, U.S. auto sales will fall about 9% this year. Global trends are largely expected to be just as bad, if not worse. Tesla's strong business performance during a challenging environment highlights the automaker's momentum and the powerful demand for fully electric vehicles. That said, it may be a good time to consider the stock while it's still experiencing a dip. Although Tesla's current price-to-earnings ratio is pricey at first glance, the valuation starts to look more attractive when investors consider the company's strong momentum and management's optimistic outlook. Tesla still lands a Zacks rank number 3 hold, with its automotive domestic industry now in the top 27% of over 250 Zacks industries. While there could be better buying opportunities ahead, Tesla continues to trade at a far better valuation than it has in the past. Also, electric vehicles are still a relatively small part of the auto industry market, and the space still has massive potential to grow. Moreover, Tesla stock still appears poised for growth, and earnings estimate revisions are up from last quarter. Patient investors could be rewarded for holding the stock, with the average Zacks price target suggesting a 66% upside from the current levels. Experts believe that Tesla stock is a high-risk, high-reward stock. Make sure to subscribe to this channel right now.